since 2020.
Plus, AMD delivers fourth quarter guidance. It does say it expects to sell $2 billion worth of AI chips next year. And we're going to check in on what's been a rough ride for Tesla stock lately. It's the worst of the Magnificent Seven in terms of performance over the last quarter. Shares, though, look to be bouncing this morning as CEO Elon Musk ups his forecast for Cybertruck production.
Let's begin, though, with the new month. Talk about the markets on.
Hello. Good morning. Welcome to another market update of ES Futures Trading. Today is Wednesday. It's the first day of November. It is now 2 a.m. Eastern Time. Okay, let's go straight to. I'm going to start today with this market, but with what we have here. Everything started. Oh, come on! I can't remember this. Everything started here. We got during this day. Come on, I can't remember now. It was one of these days. I guess these days was, there was a strong half here, half session here. The second half was very weak. The opposite happened in the next day, right? The strong half was the bottom one, the second one, which was down here. That was an indication something was going on here at the time. Or was something like that. God, I can't remember, my God. But this was key. This was key to what's happening now. Because what that thing did is it formed a range. It gave us a 3-day range, right? Yesterday, or the day before yesterday, ended the auction to the downside in the daily time frame, which is this day. This day ended was and yesterday we have a really painful, excruciating day to watch. Really bad. Only one opportunity here. I hope you have seen this formation here. This was a mini 45 degree. The previous day, okay, the last thing you want to be here, or I wanted to be here, was short. Short was extremely risky. The really high risk when the shorts were coming from the same level, right? Every rally was being sold in here, and every time the market just came back to what came out to be POC. Every time, and every time the market has less and less. Traders were shorting in the hole here. They were forced to cover the next day, later in the session, and the next day as well. And the next day, the same thing happened. Look at this. And you have the 4200. We have the 4200 right here. And the market keeps selling. What's happening after selling? It came back. But it was different, right? Because the downside movement has some kind of like it wasn't truncated like here. Every time the traders were shorting the market, they have less and less. They were having something here, all right. But at the end, value was higher yesterday. Good amount of the day was higher. When the market broke and took this high out first, then this one, and then this one, value actually moved lower, and POC could not move. POC had a chance to move lower or move somewhere in here. It didn't, right? It didn't. There is no culmination to the upside auction here. You can see there's a truncated market here in the upper side, but the same thing is happening in the lower side as well. And as you can see here, the same thing is going on here. There's no excess down here. The action to the downside has not been completed here, not been completed here. But another pattern, right? This market is very short. Inventory is very short. This day, in between these 2 days, we have a lot of weak inventory here. This is a whole overnight session short there was no counteraction here. You can see the market just open and boom, shoot it to the downside. Now, today we have FOMC. Tomorrow we have Apple. We have a spike after the Treasury funding announcement at 8:30 a.m., which is, I think, is just an excuse for this market to do some rebalancing inventory here. You can see Settle. Settle was the base of this break. It's right there. And now this overnight spike, we have an overnight spike here. We have to deal with an overnight spike here and an unfinished action here. Remember, the overnight doesn't repair the weak levels. We have a weak level here, another weak level here as well, and this one, M low, I also consider this being a weak because it came from this high here, or you can also call this low down here. The 4200 is kind of like in the way. The resistance is 4250. You can call this or this, whatever. Which you will take it, which I take. I took those ones from the daily time frame charts. Take a look. I'm going to expand this. Let's do this. Okay, we have here the monthly time frame. Notice what the monthly time frame is doing. We have a trend to the downside. The bigger time frame is trending to the downside. October ended inside, not just inside the 13-month range, but inside this 2-month range here. We have 2-month range here, which is part of the bigger 4-month range here. It closed inside, right inside this. There's nothing. I mean, this is bigger time frames. Now the weekly, we have two distributions here. Two ranges. So one big range up here, another big range down here. The market is still here. It's still in here. We have an inside bar, trend to the downside here as well. We have 3 weeks. This is the third week, unless the market. Unless the market takes this high out, the trend remains to the downside in the weekly or the medium time frame. There's no excess at the bottom. Look at this low. It's the same as these lows as well. These two lows here. And the daily, we have, in the daily, we can see cessation or, the trend to the downside has ended here. We have 1, 2, 3 days going to the downside after the market took this level out. Why I mark this level here? Because it comes from this area here. You can say we have multiple lows here, kind of like a support level here. The market was bought from that level several times again, and now that the market has went through this, now this is support. I mean, what's the value of that, right? To me, it's nothing, but traders see that as a support. Right? That traders use those levels to sell or to buy. That's why I have it here. I expect some resistance here. You could call this 42.50 or 42.43. from this, which is would be, you can take this low or this high, but this area, I call this an area, huh? And also this is the upper 20-week range low. What the heck is that? Is this, you know, I have a range here, this low is this one, I have it marked here. The high of this lower range is this one. The two-month range high, which is this one up here, would be this one here. And why I don't have those levels here in my chart to trade, but to monitor what the market does. You know, if I see a lot back and forth, or the market stopping there, being sold from that level, being bought from that level, it kind of gives me an idea who is, you know, who is the dominant force, or what kind of participants are the dominant force in this market. You can see bigger trading money, bigger capital. It can be short-term trading. All of those things, all of those actions are an indication of one or the other. And that's just one piece of information. Right? It means nothing if it is not seen in context. The idea is to see everything in context here. Now, today, we have a really interesting day today. Okay? We have a really interesting day today. We had ADP at 8:15, market rally. We have Treasury's announcement. This is the first time I'm watching this thing here. What the heck it is? Each quarter responding needs for the next 2 quarters. Okay. At 10 a.m. we have ISM, construction spending and JOLTS. And 2 p.m. we have MC, and this one also, I think is very important. What Chairman Powell had. Everybody knows kind of like knows what can happen here. And the last time, and tomorrow we have also jobless, the weekly jobless claim, and non-farm roll, non-farm payroll on Friday. This is the monthly, this is the weekly. And the last time we have FOMC or Chairman Powell speaking, we had, let me close these things. Oh, before going over there, you know, trading. What is trading about? You know, notice what happened yesterday. You know, yesterday we had, this is the bond market down here, the 10 and the 30. Notice what happened yesterday. Just before the opening of the futures, the bond market opens 1 hour before. We have a big gap, right? Big gap in the overlay. This was a gap from here all the way up to here, and the gap was closed kind of right away. You know, by the time the market opened, the gap was already closed, and we had a strong selling reaction in futures. And today is quite the opposite, right? Remember this. Oh, come on. You know, this is market dynamics. You know, the market closed up here yesterday, and look at this big break the bond market had, and the overnight. And now it's just doing the same, but in the opposite direction here. Right? The market was supposed to open with a gap. The gap was closed before the opening in the bond market. This is right there. Now we have 1, 2, 3 lows here. This makes 4. I don't think this is correct, has corrected. Notice this beautiful trend here. This is you can put a straight line here. When I see those kind of things, I kind of have like an alarm, right? Like a red flag there, a warning sign. It starts to, one of these alarms that you have when something can be going, something wrong can be going. It's beep, 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 beep. They start to beeps, right, when I see these kind of things. Right? The same thing can be seen here as well. And the same thing, the same principles of trading applies to all market. We didn't have a gap inventory is very short. The market didn't care about the overnight inventory. Inventory didn't make any. Oh, my bad. It actually did a counteraction. There was short inventory, and the rally was a counteraction. And look what happened when the market opened down here, or up here. It shoots inside the range, and the market goes inside the range. The opposite side becomes. This is long liquidation. What we may have here. Maybe we can have short covering here. If we have more long liquidation, there are good odds that this market can go higher. You know, the bond market can have something to the upside now. Notice this is the daily now. Notice this. You know, this is the stem of the B. This is the B. We have a breakout here. You know, if more long liquidations keeps happening here, this can have an upside movement here. All right, let's go back to what the market is doing now. Yesterday, this rally, man, this market was excruciating here, and I decided here. I took a little short. I guess I don't remember in which period here. But the market just wasn't there. Yeah, I know I was against the trend because value was higher. I was expecting, I guess I was playing a counter action here. But I didn't expect much, right? But the market actually didn't give me anything. Okay, I say I just closed my position there. And when I start to see this selling coming from this level, I decided, okay, short is the last thing I want to be. Yesterday, or the day previous, we have a 45 and a really clear 45 was happening, was developing yesterday. And I decided I want to be long here. Well, I missed the trade here when the market couldn't take settle. You know, it stopped. It was bought from settle here, and when G didn't take settle, I missed this trade here. This was the trade here. You know, because whenever I want to place a trade, one thing that I need to know before I place a trade is when my exit is going to be, what the market needs to do, and how I know I am wrong. All right. So the stop here was settled. If the market comes back or too close to settle, that was the meaning that the market my trade wasn't working, and you know. But after that, there was no way here I could get in. I couldn't get in. Anyway, I could see what the market was doing here because there is a lot of inventory. Remember, this is something that we have to remember as well. You know, there was a lot of inventory here, which was the potential destination of this trade, this area here. All right? The market gave us some clues here, and this level, but I just couldn't. No, it wasn't my market. I thought the risk to the upside was kind of like high, and I couldn't get in there. Now we have this non-excess. The action has not been completed, and now what we may have here, we may have upside extension here. All right. Remember, from the previous day, the next node of volume would be this area here. Let's call all the 20s, okay? All this area here, from the 23 to 25. 23, 35, kind of like this area here. All right? Because what I notice is this market is using these supplies here, 25, 33. 25.50, 33. My bad. Where the heck is? No, I will leave that in this chart. Okay, I don't want to put too much stuff here. It already has a lot. I will leave it here. Now, those are volumes here. The next big area is this whole area here. I will just call it that area. Okay. When I expect something here, some selling, or maybe some short covering start to happen around this area, the 42.50 here. All right. Now, what we have now, just before the opening, 8 minutes before the opening here, we have a spike to the upside. This is a spike. The market seems like it's going to open above the spike, which is a positive sign. And also we have a gap. So gap guidelines, spike guidelines apply. Opening up above the spike is a positive sign. Now, the next thing is, if we have a gap, go with the gap that is not filled rather quickly. If the gap is not filled, that's a strong market. Now we have FOMC. Inventory, the market is very short. Okay, it's very short. This market is very short. Be aware of that. Also, something to carry on for the future is this low. Okay, they will have no excess here. The action to the downside wasn't completed here. We have excess here, but this low is weak, coming from fallback or overnight POC, exactly from overnight POC, and there is no excess down here as well. So the low side is weak, and if you check your daily charts, your daily bars from the daily chart, below this level also, so the market is super weak, the structure is very weak, and the same goes to the upper side. Notice here, right? You have 1, 2, 3 highs all together. These 3 selling comes from the same level. This high is weak. This high is also weak. This is good, or better. Because it's questionable because you have POC there. This area, this POC could have been any level down here as well. And of course, no excess here. With these levels here. Notice the phenomenon that happened here. You have 1, 2, 3, 4, 5 highs here. The market barely taking this out. Non-excess, the action to the upside has not been completed here. The same thing that is happening down here. Action not being completed here. The same thing happened here. That's why it's very important to carry on information. We don't know when it's going to be useful. Okay, we have this one. And what happened in one time frame happens in all time frames. What I mean with that? We may have, I guess we have, I was looking maybe for something like this, for example. You have two highs here. This one takes this high out, but it doesn't have extension. There's a lot of stops here as well that remain here. Technically it's good, but there's a lot of stops here. This is a weak area here. I was expecting something like that yesterday as well to enter the market. Maybe this area, this G taking this one and H here coming like selling here. That would be, sometimes you just have to go with the guts. But I thought I was expecting something to buy here, but it didn't happen. It didn't happen. I didn't have a chance to enter the long here. And happens in the intraday, happens in the daily time frame as well, as you can see. Now, notice where this market has been selling, it's been sold from. The market has not re-entered this upper range yet. But all the signs, what I'm seeing here is signs of a strong market here. At least in the short term. The 4,200 now. Carry this information on. Okay? got this where the base of this spike is. Okay. Check this out. This is why it's very important to do your homework. Where this base is. 4,200. Okay. It tells you who is buying here. Now, who buys from this exact level here? Exact level here. This wasn't good. This isn't good. This isn't good as well. All right. No good. No good. Right. All of this inventory here. Okay. All this long inventory that we have here is not the best, it's not a strong one. I don't think it's inventory that can last there. That's going to last for a longer time. Whether that statement is going to be true or it's going to be false, the market will provide me. But the odds don't favor that this upside movement is going to be a lasting one. Okay, there are good odds the market is going to retrace this movement. Now, when it's going to do it, that's another question. All right. So far, we have momentum to the upside. We have something that looks like short covering. It was looking like short covering. I have noticed that there was good volume at the closing. There was good volume, in this period here. The market just did not collapse. There was no liquidation. There's some buying there. All right. I wish you guys a good rest of a good trading day. Unfortunately, I cannot keep doing the stream. I think there are going to be some good opportunities today. Stay safe and good luck. Bye-bye.